Hey, welcome back. It's Jason Walter here. One of the most significant metrics to look at if you want to get a glimpse into the future about our housing market is to have a look at pending home sales. This is because a pending home sale is when a contract is signed by the home seller and the home buyer, and then the house closes escrow or the sale finalizes about a month from contract signing. So in today's housing market update, I'm going to share the latest reports for you because a brand new report was just released today so we can get a glimpse into the future about our housing market in the months to come. I'm also going to share the latest details regarding current mortgage rates and mortgage application numbers. I have lots to cover today. I'm really excited to share this video with you. And before we get started, please hit the like button. I greatly appreciate that. If you comment and like this video and also share it to others, that helps support the channel, and I greatly appreciate that. And don't forget to get your 2 free stocks, compliments of Webull. I'll leave a link below for that. Okay, let's talk about pending home sales for existing houses, meaning not brand new houses, because a brand new report was released today from the National Association of Realtors. After the records that were set in December and January, pending home sales in February decreased 10.6%, and all 4 major regions in the US experienced a month-over-month drop in pending home sales, led by the South with a 13% decrease. This marks the second consecutive month-over-month dip in contract signings. However, when compared to 1 year ago, the dip in pendings was less pronounced because pendings were down only 0.5% compared to February 2020. For example, on a regional basis, in the Northeast, the pending home sale index decreased 3.9% from a year ago. In the Midwest, it fell 6.1%. In contrast, contract signings actually increased in the South by 2.9%, while the West rose by 1.9%. The U.S. housing market is suffering from its lowest supply in history, and that is taking an increasingly toll on home sales. Therefore, in my opinion, if we had more houses for sale, we would have more home sales. Housing inventory set a record low in January, and then it set another record low in February as well. For example, there were 1.03 million existing houses for sale at the end of February 2021. You compare that to 1.46 million in February 2020. In other words, as of the end of February, there were approximately 430,000 less houses available for sale compared to 1 year ago. And that was the largest annual decline ever and the lowest supply on record. Therefore, the drop of pending home sales in February by about 11% is mainly due to record low inventory. However, another factor may be due to rising interest rates. So mortgage interest rates increased from about 2.8% at the beginning of February to about 3.3% by the end of the month. In other words, rates increased by 0.5% in only 28 days. All right, so you're probably asking yourself, what impacts does this have on current home buyers right now, right? So I actually did some research for you. So for a $300,000 loan, that 0.5% increase equates to an increase of around $81 per month. This is because a $300,000 loan at 2.8% equates to a mortgage payment of about $1,233. However, your payment would increase to $1,314 per month if the interest rate increased to 3.3%. I also wanted to point out that interest rates absolutely skyrocketed from January through February, but in March they have been hovering around 3.3 to 3.4%. Yet another reason why pending home sales decreased may be due to the fact that we have near record high home prices right now. As I mentioned in my video the other day, home prices are up about 11% from a year ago, according to the latest S&P CoreLogic Case-Shiller Home Price Index. All right, changing gears slightly, let's talk about mortgage application numbers because, again, this is another leading indicator of our housing market. The Mortgage Bankers Association, or the MBA, announced today that mortgage applications actually decreased 2.2% from 1 week earlier. They reported that mortgage applications for refinances dropped drastically, but no big surprises there given that mortgage interest rates have increased quite a bit this year so far. Here's what caught my attention though, and this is related to mortgage applications for home purchases. The MBA's unadjusted purchase index decreased 1% compared with the previous week. No big deal there, right? However, it was a whopping 39% higher than the same week 1 year ago. Here's something to definitely keep in mind though, because what happened 1 year ago, right? So 1 year ago, many parts of the nation were on lockdown. In California, for example, we had a stay-at-home order that lasted about 3 weeks. And real estate agents like myself in California here weren't even allowed to meet with their clients for about a month. Starting in March, a lot of homeowners took their houses off the market or put their plans on hold to list their house for sale. This caused pending home sales and home sales to plummet from March to May last year. Therefore, I would expect pending home sales to increase from March to May this year. But again, it all depends on housing inventory because housing inventory is so much less than it was 1 year ago. If inventory continues to drop, then I would expect this would impact home sales and home pendings. However, I would be personally shocked if inventory does not increase as we approach the spring home buying season. Joel Kahn, who's an associate vice president for the MBA, stated the following: many prospective home buyers this spring are feeling the effects of higher rates and rapidly accelerating home prices. Record low inventory is pushing home price growth at double the rate from a year ago and even above the 10% growth rates we saw in 2005. The housing market is in desperate need of more inventory to cool price growth and preserve affordability. Amen to that. And lastly, according to Redfin, more houses are selling for over their asking price than ever before. And San Jose, Sacramento, and Salt Lake City are driving this all-time high. All right, let's have a look at this graphic here. This is the share of homes that sold above the asking price in San Jose, Sacramento, and Salt Lake City. So all three cities experienced a big dip early on during this pandemic, but have surged, especially the last half of last year. Now take a look at this year so far. The percentage of homes that are selling for over their asking price has absolutely skyrocketed. They reported that nearly 40% of homes in the US are selling for more than their asking price, and that's the highest share on record. However, that's not the case across the entire nation though, right? So for example, only 12% of homes in Miami sold for over the asking price, and that was the lowest percentage of all metros that Redfin looked at. Followed after Miami were New York, New Orleans, Orlando, and Houston. What I'm personally seeing in Sacramento is that the vast majority of the home buyers out there are willing to pay over the asking price, especially for brand new listings. For example, the last 3 listings I had in the Sacramento area sold between 6 to 16% over the asking price. This house here that I listed and sold about a month ago had 8 offers in 4 days on the market, and it sold for $72,000 more than the asking price. And here's another house here too. So this house was listed for sale also for only 4 days. We received 12 offers and it sold for $67,000 more than the asking price. Another listing that I have currently in contract in the Sacramento area is currently in contract for about $40,000 more than the asking price. And this was after receiving 5 offers in 5 days. In my area, it's very common for home buyers to waive their appraisal contingency or offer to pay more than the appraised value in case it comes in lower than the contract price. Will this housing market cool off? Time will tell, and stay tuned on the channel for that. If you enjoyed watching this video, please hit the like button. I greatly appreciate that, and also consider subscribing. I post videos about how this pandemic is affecting our housing market, and I love making these videos for you, so hope you're getting a lot of value out of them. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.